Hello everyone, I'm L.A. Little, and this is your weekly NeoTA wrap. We take a look at these markets. We do it from a neoclassical perspective, each time asking ourselves what happened last week, what does it tell us about the coming ones. We do the show every Sunday evening, broadcast at or before 10 o'clock Eastern Time. It's archived on YouTube. Available to you there under the channel L.A. Little. Subscribe, contents push to be notified. It's a nice easy way to keep up with what's happening. As far as what is happening, last week, look at the numbers. Dow up, Russell up, S&P up, NASDAQ flat, barely down. For the year, the same. And that comes despite there being a nice downtick most of the week. Big rally on Friday, we get the unemployment number. That was the excuse to take it higher again. Financials pitched in on that battle, with the TLT, the bonds, the long end of the curve coming back, short end of the curve and the long end of the curve, interest rates going up. That helps the banks in terms of their bottom line. And we also had Berkshire Hathaway with a good earnings report last week. So the financials kicked in last week. And that really was the power behind the S&P and to some extent behind the Dow. The Russell, yeah, it eked out a better gain, but the Russell's really been trailing. The only thing that's really got a big push going this year so far is the NASDAQ. But when we look at that, the NASDAQ doesn't look all that good. And as I've been pointing out for quite some time, and I don't mean all that good, it just doesn't look that powerful. What I've been pointing out for quite a while is it's really not here, it's there. It's what's happening in Asia, it's what happens in Europe. It's really driving these markets and allowing these markets to hang. And so if we pop over to take a look at what that is going on, the first thing we have to notice is what's happening in China. And I'm going to use Asher, which is a tracker of the China A shares. These are the big cap A shares. They led the way up. Then we had some of the smaller caps, and we had the Hong Kong shares kick in. This got a pullback, and it's hard to see it here, but that's 10%. Top to bottom here, this little pullback was a 10+% pullback. And then it spikes right back up, 2.5%, maybe 3% already. And tonight, what do we have in China today? China says, hey, got to bring those rates down more. We're not growing fast enough. And overnight, this baby's going to pop up again and go right back up to where it was to start with. And so you have in China, the continuation of the easing policy, the I will do whatever it takes kind of policy. So we have a range, and we're coming right back up to test the top of the range, and we'll see what it wants to do when it gets up there. Does that mean that is where it's going to test to, or is it going to go farther? If we look elsewhere, and again I'm going to concentrate on the overseas markets, and I'll actually go to the indexes. Looking at Europe, Europe also got a push up on Friday. Europe got a hammer reversal on Thursday, but it was higher volume. It tested into these lows. Again, the ideal here, and let me bring over the weekly, the ideal here is that we're building out ranges. And those ranges, as they build out, will get bounces. And so you'll get a range, you'll test that range, and in this case we test it down, and I actually drew that wrong. Let's try it again. We test it as low as this range, and if we were to do another range below it, right, that would bring us back into these swing point highs, retest, regen, so forth. And so that would be actually a great buy down in this area. But just like anything else, that's your ideal buy. I don't know that it's going to get there. We actually may or may not. What we do know is we have a range in place now. That range is here, and that range right now is telling us sideways on the daily chart. And so if we pop the daily back up, you can see that range here. So the range started out pulling back to this area, then it extended on down to the next area, and then it was attempting to get to the third one. Didn't quite get there, got pretty close, but you can see what it's doing. So what is it going to do now? It's going to come right back into here, and it's going to test into that probably tomorrow, the next day at the latest. That will be the key test. This area will be the key test. It will be the key test because outside of this, it goes right back to the highs, attacks these bars, right? Question is can it get there? It's got to retest, regen, bearish here, and so as it comes back into it once, comes back into it twice, gets a little better chance that it can get deeper this time. But at the same time, you know, you actually had a, was it this one? Yeah, it was this one right here. You actually had a low here as well, and that low was a bearish retest regen, and it's back into it. So you've got two of them, they're overlapping here. That's going to be the key area as it comes back. And again, as long as you got range trades, these markets are not going to go anywhere. And usually when a range develops after a long move, it takes a while. It doesn't just happen. In other words, you don't get one of these big long moves up, right? That's more or less uninterrupted. And then you kind of consolidate, and then you bang back down, and then you come up and you just keep going. That's usually not the way it works. Now it's possible, but that's not the normal case. The more normal case is, hey, I've got a range. So what am I going to do? I'm going to bounce around inside this range and spend some time. And then eventually, right, if all things continue, right, whatever trend was in place, which was up, will continue. But it takes it a while. And that's what I would expect that's going to happen here. And if I look at the DAX is even in a little bit deeper of a range, but the same idea, coming back into a retest regen. It's got two of them, they're overlapping. The overlap is right here where it is now, so that should be the area that gives it trouble. It's this area here. And given the way this has bounced up and into this and how deeply it had sold, right, my guess is that what you're really going to see is you're going to see the top overlap, which is this area, be the key area. This breakdown bar, the top of this low, that's going to be the key spot right there. And that's where I would expect to see this thing run into some trouble, shall we say. So that's the overseas markets. Now, you know, China, if it breaks out and goes higher, and if we get the Nikkei to tag along with it, the Nikkei's down here, Nikkei's probably going to bounce as well. That yen is driving this. In China, you don't have so much the pressure on the currency, but what we have elsewhere is we have pressures on the currencies, as you know, because the dollar is, shall we say, misbehaving in that it's actually trying to go down. Let's look at the dollar right quick. So here's the dollar on the daily. Dollar gets into those big bars, can't stay there, sells back off, and that's despite a stronger employment number, which you would think would put strength into the dollar. That says the dollar is going to try to test lower again. If you look here, it's still going to try to get to the bottom of this bar back at this level, which is the January 19th bar. That looks like where it wants to try to go. If I draw that out, all right, I've got this range, and then I potentially have another range forming underneath it. Inside that, I've kind of got two, you know, equidistant areas inside of it, actually coming to about right there, and then, you know, that bar, if we drew it right, would probably be a little bit deeper. I'll clean it up here while I talk. And so if that's really what's happening, right, if that's the case that's taking place, then what we should expect to see is we should expect to see this dollar have trouble, right? As it comes back, have trouble, keep going lower when it gets to the bottom of that bar. That's when you'll get the bounce. That's when you'll get some pressure back on these other currencies, which right now are trying to go higher. And the other ones I'm talking about are the two that are giving trouble to Asia, Japan in particular, and Europe. And that's the euro, the FXE, nice big spike up, bring it back, look at it here. Now I did get an over-under that may be significant, may not, we'll have to see. That may say, okay, we're going to come back in and test into this bar, this big bar, the 1070 area. If it does, then that will allow Europe to trade higher. But you know, that's still not in the cards. We don't quite know. This certainly isn't a two-bar reversal because we don't have enough an extension. Moving to Japan's currency, we have another, you know, range going on here, and this one actually looks like it's going to try to continue trading in this big range. And again, I want to bring this to the weekly. That range has a much higher level that we can trade to. Let me try to draw that again. And that higher level, about right there, that higher level, we're at the bottom end of that. it could still come all the way back up here. And if it does, that's going to put pressure on Japan. Remember, folks, what we're doing is we're borrowing from Peter, to pay Paul. That's really what's going on in these markets. We don't have increasing economic activity, increasing demand. We have companies and countries stealing from each other. Global currency devaluation, it's likely that it's going to continue. I wrote an article. You're welcome to come read it. Just register to sign in and check it out. But essentially, if you look at some of these charts inside this, what we're talking about is the yen going down is pressuring the Japanese stocks higher. The hedge, the currency, large cap euros, right, going higher when the ETF FXE is going down. That's exactly what the dollar did when the dollar sold off from 09 all the way until now, right? The dollar sold off while the market went higher. Those are what's driving these markets. It's not economic activity. It's the inability to get economic activity that's causing one country to steal from another, and it continues to happen over and over. I'll come back. We'll talk about where we think this week's going to go, and it's kind of an interesting take here. So stay with me. I'll be right back, and we'll take a look.
Learn how to trade with the Trade with LA service provided to you by TA Today. This service includes daily portfolio and comments that are emailed to you before the market opens each morning. We provide a daily view of the markets and a model portfolio you can follow even if you work another job. Every weekend, LA records his weekend broadcasts that gives you a synopsis of the week and a prognosis of coming weeks. You will also have access to our Teach and Trade room, where LA provides day trades and teaches neoclassical concepts throughout the trading day. To get started, go to our homepage and click Trade with LA.
So to talk about where this market might go, we need to look at where this market is. And so I've got the S&P up, I've got the daily up. We had that big rally that we talked about on Friday. Again, no volume. We're coming right back to the top, right? We've tried to get over this top multiple times. 1, 2, 3, 4, 5, 6, now 7. 7 times. You think you hit it enough, you get over it. But that says that there's actually sellers up here that are shorting the market, right? That eventually they just succumb and you just go over it. Well, that's probably true to some extent, but you know who's really selling? The people that bought it down here are selling it. They're flipping it, right? They're playing the range just like I'm talking about. There is a range. They're trading that range and they're waiting. And why? Because there's nothing happening. There's no incentive to take this much higher. Here's the swing point high. If they break it out, they can get over it. You get under, you get back over, you got a hammer reversal. Hey, it's a great setup. This should break out. But you know what? This market's going to have a hard time breaking out. And it's not because of this chart. This chart looks pretty good. Let's go look at some of the other ones. Here's the NASDAQ. If we look at the NASDAQ, this doesn't look anything like the S&P. NASDAQ broke out, right? Came back down. And if you remember, the NASDAQ failed on its bullish retest regenerate zone on the daily time frame. That says that for a while, you're going to go sideways. You're not going to go up. In other words, you got up, you failed. You came back, you couldn't hold, you got underneath it. If you can't hold it, that means the buyers just aren't there. And so here we come, we're coming back up into it. This area here is probably going to be the death knell again, probably going to head right back down again as a result of the fact that there just aren't any buyers. If we look at it on the weekly, again, hammer reversal. But look at your volumes. Your volumes to the downside just dwarfing anything to the upside. So even though it's holding, it's not a pretty picture. If I look at the NDX, it's even weaker. Looks about the same, a little bit weaker. Look at it on the weekly. I had the breakout attempt last week, had the breakout attempt again this week. Both have failed. Both hit with more volume. It looks to me like what we're really setting up for either this week or next is an attempt to get over those highs and then fall back under them one more time. So in other words, we've got some volume at the top. You know, when you get volume up there, you usually try to go get it, and I wouldn't be surprised to see this try to go get it this week or next week. But when it gets it, I just don't know if it's going to do anything with it. And that brings me to the small caps. If I look at the small caps are telling me there still are serious problems. And I know that because I look at a lot of charts. The internals don't look very good. You've got this range here, the range up above it, right? This is the test. Get back over this breakdown bar or don't, right? And if you do, then you're simply coming back in to do a retest regen on these prior two swing point lows that you broke. So this whole shaded area here that I'm about to shade for you, this becomes a very tough area to get over. And so as it comes back up, I think the Russell itself is going to have difficulty getting back over that area. Now, having said that, if I look at it on the weekly, you know, there is a positive, and the positive is that twice now it has come back in and it has done a bullish retest regen. Did it here and did it again this week. Both times it held. The negative of that is both times it came in, it actually came in with more volume than it broke out with. And so when I look at the breakout here, that's the breakout. When I look at the swing point high, that's the swing point high. Actually, it's this one below it. It's this little small one down here. So take and draw in your lines. That's your tops. Here's how you're hitting your tops. A little disconnect, right? A lot more volume coming back. This thing's going to have trouble getting back up in any significant way, it looks to me. Now, if I try to look at the sectors, you know, there's a couple sectors that did pretty well last week. In particular, the one that caught my eye was the financials. I'll just pull it up right quick. The financials actually got a nice push up, and if you look at it on the weekly, they're coming up to hit these swing point highs. If the financials were to power higher and continue to power higher, then yes, that would change the equation to some degree, because the S&Ps could pull along the rest of the market, which has not been something that's happened this year. The big push in February was on technology, not on financials. And then finally, if we go to the OX markets, I want to show you the wild card this week, and the wild card is the bonds. If you look at those long-term rates, the bonds, and we'll pull it back to the weekly to start with, the bonds tested into that low, and they tested it with more volume. They got under it, they stayed under it, they broke it. That says you've got an ABCD structure. Now, they did come off those lows, and they're coming back to do a retest regen bearish on the weekly, on the daily time frame. But on the weekly time frame, you've actually got a low down here that would be a break of the big bar, right, and an extension to the downside. And you got volume escalation as you're trying to do it, just like you had volume escalation on the way back here, right? And the only thing that stands in its way is this October low in the markets, high in the bonds. That is the big number. Gets under there, people are going to say bonds are done. Well, believe it or not, bonds won't be done. They'll simply get a bounce after everybody exits. Kind of the way they like to move things, right? And so I wouldn't get too excited if they break, which I expect they probably will break. And the reason I say that is if I go back to the daily, right? The daily came back up, came into this big bar, and got right back into it and fell right back out of it. Looks to me like this is going to try to work lower. If it does work lower, and if it does break those lows and people start saying, you know, interest rates are going up, we're going to get a Fed, you know, raising rates, blah, 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 that is going to be a headwind for the markets. Now, Friday, when I looked at this, Thursday, when I looked at these markets, I was looking at the dollar, and I was saying to myself, you know, this dollar, given the way it traded, this dollar looks as if it just failed. Somebody probably knows something. We're going to get this thing to reverse, and therefore I thought the markets would trade lower, and that was kind of a realization right towards the end of the show. Well, it actually didn't trade lower. Nobody knew anything. It popped up, and even though it couldn't go anywhere, the general equity markets did get a nice bounce off their lows. So I was totally wrong in terms of that late call on Thursday. But you know, if I look at this dollar did what I thought it would do. It just didn't matter to the markets. And part of that, of course, was Asia, and part of it was Europe. But then again, part of it was the employment number and an excuse for us to once more take it back up, and take it up a lot more than I thought that they possibly could. So, what do I think is going to happen this week? Well, as I said, I suspect we're going to see a test on, and it would be a good chance that we get it this week, on the NDX, and pulling back up the general markets here. And so if I pull this back up and look at the NDX, I suspect it's going to try to work its way back up towards these highs. Now, I don't know that it's going to get there this week, but I suspect that, sometime this week, next week, it's going to try to get to those highs. Maybe we're going to chop around a lot before we get there. You've got enough headwinds that this thing can chop up and down. And if you're not, if you're not using the chop to your advantage, then you really need to kind of rethink what's happening right now. And that was something else I wrote about, sometime back. Probably 3 weeks ago, I don't know, probably 2 months ago at this point. It's way back here. It's a roller coaster market, and you gotta, the buy and hold crowd has kind of been put on notice. And my ideal here is that if you want to make money in this market, right, there's a character change. When the character changes, you got to tweak your strategy a little bit. And I don't mean you go out and you start doing something drastically different. What I'm talking about is you go out and you tweak it. In other words, if it's going to range trade, then you trade the range. You don't just buy something and hold it and hope it's going to go up. When a market is going up like like this one has for 4 or 5 years, actually this is the 6th year now, well, you just buy stuff and it bails you out. It doesn't matter what the heck you buy. When the market's going sideways, that doesn't happen. You have to come in, you have to come out, and you have to pick the right places to be. And if you're not doing that, you're getting chopped around. And I don't know what your portfolios look like, but if that's what's happening to you, think about what you're doing and think about what this market's doing. Finally coming back to the idea of this market chopping around and slowly working its way back up towards those highs, and more than likely going to fail up there sometime this week or next would be my guess. We've got a range trade, folks. I don't think that range trade's going away, and I think a big part of that is what's happening in Asia and Europe. Watch them, and if you watch them, then you'll know what to watch here. I'm gonna leave it at that. Thanks for joining me. Have a great one. Tell a friend, tell two. I'm LA. This is and was your weekly NeoTA wrap. Have a great night. I'll see you next time. Good night.